Picture this. The market is on the edge of a turning point. Headlines are filled with noise, experts are divided, and investors are unsure about where to put their money. But behind all that confusion, one stock is quietly positioning itself to become a dominant player in the financial world, SoFi Technologies. Today we're going to break down why SoFi is one of the most important companies to watch, how it's preparing for explosive growth, and why the broader market conditions are lining up in its favor. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. First, let's address the skepticism. Some people call SoFi a meme stock, grouping it with companies that rely on social media hype instead of fundamentals. But that couldn't be further from the truth. SoFi is not just a stock people talk about online. It's a company with real numbers, real revenue growth, and a disruptive business model that is shaking up the legacy banking system. Its customer base continues to grow, its profitability is improving quarter after quarter, and the leadership team is executing on a long-term vision that few in the industry can match. The upcoming quarters, particularly Q3 and Q4, are expected to be crucial. Analysts and insiders alike are projecting monster numbers. This is not speculation. It's backed by clear signals, strong revenue growth, increasing demand for loans, expansion in its technology segment through Galileo, and upcoming products like crypto trading and Level 1 options. These catalysts aren't just minor add-ons. They're game changers that can transform SoFi into a household name and potentially push it toward inclusion in the S&P 500 index. And once that happens, the floodgates of institutional money will open, as funds and ETFs tracking the index will have no choice but to buy SoFi shares. Now let's talk about valuation. In the IPO space, we've seen companies like Chime enter the market with flashy numbers. At one point, Chime was valued as high as $20 to $30 billion. But once it hit the market, the numbers told a different story. Chime is now sitting at around $10 billion in market cap with just $100 million in EBITDA. Compare that to SoFi, which has an EBITDA closer to $900 million and a market cap near $30 billion. The math is simple. SoFi is delivering 9 times the profitability of Chime, yet its valuation multiple is far more reasonable. Chime trades at over 100 times EBITDA, while SoFi trades at roughly 33 times. The conclusion? SoFi is the stronger, smarter bet. Leadership confidence is another piece of the puzzle. Recently, headlines suggested that CEO Anthony Noto was involved in selling shares. But the truth is different. He didn't sell to cash out. Instead, he took a $24 million loan against his SoFi holdings, agreeing to sell in 2028 if necessary. Why does this matter? Because it shows he's not only holding onto his shares, but also betting on their future value. When a CEO is willing to borrow against shares instead of selling them, it sends a clear message. He believes the stock is going much higher. Goldman Sachs, the provider of the loan, clearly agrees, or they wouldn't back it. That's a vote of confidence from both leadership and Wall Street. Market conditions are also aligning in SoFi's favor. The Federal Reserve is expected to cut interest rates soon, possibly as early as September. Lower rates mean cheaper borrowing, faster growth, and more profitability for companies like SoFi that thrive on lending and financial products. But make no mistake, the lead up to that decision will be volatile. Stocks could swing sharply as investors react to every piece of economic data. For disciplined investors, that volatility isn't something to fear. It's an opportunity. When high-quality stocks dip due to short-term panic, that's the moment to position for the next leg higher. Let's not forget options trading strategies, because this is where many investors get trapped. Every week, retail traders pile into short-term call options, hoping for quick profits. But almost every Friday, market makers win as those calls expire worthless. That's why professionals avoid chasing weekly options. Instead, the smart play is leap options, long-term contracts that allow time for the real catalysts to play out. With leaps, you don't get crushed by short-term volatility, and you can ride the big picture trends like SoFi's crypto platform launch, Galileo deals, or the expansion of its lending business. Even on days when the stock dips, leaps barely take a hit compared to weeklies, and that stability is what separates disciplined investors from gamblers. And here's the bigger vision. SoFi is not just another fintech, it's becoming a modern financial hub. Traditional banks are slow, outdated, and burdened by legacy systems. Customers are shifting to faster, more digital-first solutions. SoFi is grabbing that market share aggressively. With every new quarter, we're seeing double-digit growth. In fact, the last quarter showed 44% growth year over year, numbers that legacy banks can only dream about. If this pace continues, SoFi won't just join the S&P 500, it could eventually become one of its leaders. This isn't about hype. This is about fundamentals, leadership, and timing. We're still in the early innings of SoFi's story. As the company expands into new products, grows its customer base, and delivers consistent profits, the market will have no choice but to revalue it higher. Whether it's breaking above $30, $50, or eventually $100 per share, the roadmap is clear. Institutions will chase it, retail investors will notice it, and those who understood the story early will already be positioned. So, what's next? Keep an eye on the Federal Reserve's September decision. Watch how the market reacts to volatility. Pay attention to SoFi's Q3 and Q4 earnings because those numbers could mark the turning point that shifts the narrative permanently. This is not a company being propped up by hype. This is a company that is building, scaling, and delivering. In short, SoFi is not just surviving the market noise, it's preparing to lead in the next wave of growth. And while many investors remain distracted, those paying attention know exactly what's at stake. So if you want to understand the future of finance, don't ignore SoFi, because the real story here isn't about the noise, it's about the numbers. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.